Alright guys, welcome to episode 1 of my new psychology series. Honestly, I wanted to make something like this for a while now. Something that actually teaches traders the real side of trading and not just these fake, spammy, get rich quick videos, which you've obviously watched before, I've watched them, and they don't work. I just want to show the truth behind trading and what it actually takes to become profitable. And the truth is, psychology is 90% of the reason why 90% of traders fail. The 10% of traders who are actively profitable were the ones who managed to fix their psychology and survive trading. So if you want to stop blowing accounts, stop revenge trading, stop getting emotional with every loss and win that you take, then this series is for you. And this is episode 1. I'm going to start it properly right from the beginning. So before I tell you how psychology actually works, let me be real with you and just tell you my story. So I've been trading now for almost 4 years, and I've been through everything you can imagine. Blown accounts, past challenges, failed challenges, I've won big and lost big. I had days where I felt untouchable, and I had days where I lost my entire rent in one trade. And after going through the same spiral again and again and again, I decided to sit back and really look at why I kept losing in trading. And after months of going back through my own data, journaling every trade, and trying to pull as much data together as possible for my trading, the crazy part I realized was it wasn't even my strategy that was wrong. It was purely my psychology. The reason why I lost was always me. It was my emotions, it was my ego, it was my greed, it was my fear. And I had a huge lack of discipline, where I had the days where I just wanted to get my loss back as quickly as possible. The days I just traded because I was bored. And the days where I sized my position up for no real reason. And every mistake I made in trading had nothing to do with the technical side of it, but it had everything to do with the psychology. And once I understood how psychology worked, my trading improved tenfold. And that's why I'm making this series, because most traders think that they need a new strategy, a new indicator, better entries or better setups. But getting better at those things doesn't matter if you don't get better at your psychology. This series is literally designed to rewire your brain as a trader and to help you understand why you keep making the same mistakes over and over again, even though you tell yourself you're never going to do that mistake again. And we are going to break that cycle permanently. There's going to be 10 episodes, each episode covering the exact psychological problems that you have as a trader and the solutions on how to fix them. And yes, there's going to be a lot of episodes, but because psychology is 80% of trading, there is a lot to cover. My best advice is get a notebook and write everything I say down. Because if you can't even be disciplined to watch these videos, then you might as well delete MetaTrader, delete your broker, and stop trading immediately, because you'll never improve. I'm gonna upload one every day, so the whole course should only take 10 days in total for you guys to watch. And that's 10 days to hopefully completely rewire your brain when trading. Now, episode 1 wouldn't feel like episode 1 without a solid foundation. And this is the part you need to understand before we go any deeper into your psychology. And that is, your emotions are stronger than your strategy. And if you can't control your emotions, then your strategy is pointless. Now, I want you to write that down, because that is so important being the first episode. And that is, your emotions are stronger than your strategy. And if you can't control your emotions, your strategy is pointless. So let me break that down for you. You can have the best setup in the world, the cleanest strategy, perfect back tests and perfect risk to rewards. But if you get angry, you'll break the rules. If you get scared, you'll close early. If you get greedy, you're gonna over risk. If you get bored, you'll just take a trade just because. And if you get overconfident, you'll double your size, you'll double your risk, and you'll blow the account within one day. And no strategy can save you from you. And most traders don't lose because they're bad at trading. They lose because they're bad at handling their emotions. And trading is really one of the only jobs in the world where you can do everything right, but you still lose, and you can still lose money. And that's what messes with traders' brains. That's what makes them chase. That's what makes them doubt themselves, and it makes them act impulsively. So episode 1 is meant to wake you up about this, not scare you, but make you aware. Because if you don't take action to fix your mind, you'll keep repeating the same mistakes forever. And if you do fix your mind, you can literally trade the simplest strategy in the world and still win and still be profitable. Because psychology is what turns that strategy into a powerful strategy. So here's my message before we end episode 1. Forget everything you think trading is. Forget the hype. Forget the idea that one big trade can change your life. And forget the idea that you're just one indicator away from a perfect strategy. Because trading is a mental game, and the people who master their mindset are the people who master trading. And that's why we start here, right at the basics. Every losing streak I've ever had has come down to just one thing. And most traders don't even realize this. So welcome back to The Trader's Mind. This is episode 2. Yesterday, we set the foundation. And today, we're diving straight into the one thing that kills all accounts before strategies do. And that's fear. Fear is the emotion behind hesitation, overtrading, revenge trading, literally everything you hate about your own trading. Fear is behind this. So what actually is fear, and how does this affect your trading? So fear is your brain protecting you from danger. The problem? Your brain can't tell the difference between a lion chasing you and a candlestick moving in the wrong direction. There was a psychological study done in the University of Zurich, which found the center of your brain reacts the same way to a financial loss as it does physical pain and threats. So when the price does pull back against you, your brain instinctively goes into survival mode. That's why you move your stop loss. That's why you cut winning trades short. And that's why you get FOMO and then put stupid entries in. And unfortunately, it's biology. It's built into us. It's not just everyone being stupid. And there's two main fears within trading. Number 1, the fear of losing. This is the one you're probably more aware about. And this fear of losing creates hesitation. You see the setup, you wait, and it plays out without you. You then get really annoyed at yourself. And then the next fear is the fear of missing out, or FOMO. FOMO creates overtrading. Price moves fast, your brain panics, and you just try and chase a move quickly. That is why and how traders turn a nice clean day into an absolute disaster. And you might be totally aware of these two fears that you have within trading, because these are completely normal to anyone. However, it is so easy to get caught in a spiral or a trap in fear that it's really hard to get out of. And this is the scary part. Fear doesn't just happen once, it spirals. You have fear, you get hesitation, you miss a move, you get frustrated, you then overtrade, you then take a loss, you then get more fear, then you end up revenge trading and overtrading even more. And that loop is how everyone blows accounts. And if there's anyone watching this who thinks they've never been in that loop or spiral of fear, then you're either not a trader or you're lying, because it happens to absolutely everyone, including myself. My worst lessons and trades, they never came from my strategy being completely wrong all the time. It came from fear. Either fear of missing out or fear of actually entering a trade in the first place. And having those two fears just causes you to amplify those fears even more, because they both work against each other. One is a fear of not trading, FOMO, and one is a fear of actually entering a trade. And that's why your mind is always contradicting itself whilst trading. And I've had this where I've lost an entire 3 months worth of rent because of one silly trade that I took because I had FOMO. I then got fear because I lost that money. I then started to overtrade, revenge trade, and over risk to get that money I lost back. That then caused me to lose even more money, and it put me in a really, really bad time. And not just within trading, just in life. And it was all caused because I had a fear of it. And it was never the chart being wrong, it was never my strategy being wrong all the time, but it was just myself. I didn't know how to control my emotions and control my fear whilst trading. So how do you break fear within trading? The easiest answer is you cannot remove fear from trading. There's not a simple trick you can do to remove all your fears, but you can try and control it with structure. It's a quick 3-set step of rules in a way, which if you do before every trade, will help you out. It will reduce the fear, but of course it's not going to remove all the fear. But if you follow this every single trade, you'll become more confident each time. Number 1 is predefine your risk before taking any trade. Because if you've already accepted that you're willing to lose X amount of money or X percentage on a single trade, there's no need to panic when the trade is going into down draw. I don't mean prepare yourself for a 50% loss of your account, but prepare yourself for potentially a 1% loss that day or a 0.5% loss that day. This will stop you from having these huge stop losses and risking loads of money on one single trade. And there's 2 easy fixes. You could either reduce your stop loss, make it tighter, or reduce your lot size, which is probably the better option. This means you have less panic during the trade, you have less panic whilst opening the trade and finding an entry, and it keeps your mind clear, or as clear as it can be, for that trading session and that trading day. So number 2 is only trade A+ setups. So let me be real, my A+ setup is not your A+ setup. Everyone has their own idea of an A+ setup. However, if you have that predefined in your brain, once you've got over the fear of opening the trade and planning the trade, you will be more confident within your trade because you know that you believe it's an A+ setup. And yes, by only choosing A+ setups, you're going to be trading a lot less. By this, I mean potentially 3 trades a week. You may not like that, but the majority of profitable traders do not take a trade every single day. Including me this week, it's Thursday, I've taken 1 trade, and that was one A+ setup, and it won. If I tried to take other trades throughout the week, they could potentially be a B setup or a C setup, however you want to rate them. And they potentially could have lost, and that would have turned my week, instead of a profitable week, into a down draw week. So just try and take A+ setups. Yes, you're not going to be placing as many trades as you normally would. However, you'll be more confident with each trade you take. And number 3, which isn't really spoken about, is a 1 decision rule. What I mean by this is if the setup and the trade matches your plan, you take it. If it doesn't, you close the charts immediately and walk away. Because if you take it based off your strategy and your trading plan without getting any emotions involved, that is a good trade, regardless of if it wins or loses, because it's data. Data is good within trading. If it doesn't meet any of your setup plans, don't take the trade, because 1, you can't really use that trade as data for your strategy, and 2, you'll probably just end up losing money and you're gambling. And trading isn't about gambling. So use a 1 decision rule. If it ticks every box, straight away you enter if it's at your entry price. If it doesn't tick every box, don't take the trade. It's as simple as that. Don't click the button. And using those 3 rules really did help me with my trading and with my fear of trading. Because as I mentioned at the start, there's 2 fears. You've got the fear of losing and the fear of missing out, and they both contradict each other. So having these 3 rules in place really reduces the amount of fear from both sides that you get. It's never going to go away, but you'll get used to it in time. And remember, fear is completely normal. Fear is human. But if you don't understand fear, it will completely ruin your trading journey. And the best way is to identify fear whilst you're trading is if your breathing changes or your hands start getting tense or sweaty. You just end up clicking around the chart more. You're clicking on random things. You're going into all the different time frames and you're just all over the place. If you're starting to feel like these, don't enter a trade because you're showing fear. So shut the laptop, reset, come back the next day. There's no rush within trading. Okay, so welcome back to episode 3 of The Trader's Mind. Today's episode is about discipline. And I really want you to listen in this episode because this is the one thing that most traders say they have, but it's the first thing the market exposes if you don't have it at all. Discipline isn't just about following rules, but it's the ability to stick to your plan when your body and your emotions are literally begging you not to. It's about doing what you said you would do. after the original feeling that made you make that original decision has disappeared and you start to question yourself. If you've ever closed wins too early, changed your stop loss, added to losing trades, or taken a random trade when you knew it wasn't part of your plan, you're not lacking skill, but you're lacking discipline. And today I want to break this down properly in a way that actually helps you fix it. Not just inspire you for 10 minutes and then tomorrow you completely forget about it. So let's get into it. So here's the first thing that you need to understand. Discipline is not self-control. Discipline is system control. Most traders think discipline is about willpower. Just saying to themselves, I just need to try harder not to click the button. But we all know subconsciously that's not how the brain works. Because your brain, it has survival wiring built into it. Losses feel like danger. Uncertainty feels unsafe. And your brain's first instinct is to remove the danger as quickly as possible. That is why you move your stops. That is why you get FOMO when you're not in a trade. And that's why you try and double your position size just this one time. And your brain, it's not trying to sabotage your trading, but it's trying to protect you. But the market doesn't care about how your brain is wired and how you feel. It cares about probability and consistency. So discipline isn't be stronger than your emotions, but it's about designing a trading process that keeps you safe from your emotional brain. This is why pilots have checklists, surgeons have exact steps, and why professional athletes repeat the same routine before every single game. And in trading, discipline is the exact same thing. A repeated behavior that doesn't change just because you feel something. And let's be brutally honest here, because I've been through this as well. You don't break discipline because you're weak. You break discipline because usually there's a 2 to 10 second window where your emotions are much louder than your logic. And here's the scary part. Most of you guys aren't even aware that this is happening at the time. So let me give you some examples which you'll recognize. So number one, you're in profit, but you close a winning trade early. Not because the chart told you to, but because the fear of giving that money back at this current time is stronger than your trading plan. Example two, you're in a losing trade and you move the stop loss. You know you shouldn't, but you do it anyway, just to try and avoid the feeling of a bigger loss that could potentially feel painful. Or sometimes you actually move the stop loss up. And how many times have you moved your stop loss up, the trade's come back down a little bit, and then it's gone straight back up, but it hit your stop loss, but it wouldn't have hit the original stop loss. Happens all the time. And example three, you miss the setup, but you try and force the trade anyway in another random part of the market. Because that discomfort of you missing that trade that you were planning for makes you want to try and instantly jump into it. And these three moments, they're all emotional spikes. And every trader has them. Even professionals and full-time traders, they have them. The only difference is that the professional and full-time traders don't act on these emotional spikes. They've trained themselves to wait until that emotion has passed, and then they make their decision. Because discipline is a delay. It's not suppression. And if you can just delay your decision making by 10 seconds, you'll instantly become like 80% better in your trading. What I mean by this is, say you miss your setup, your brain is forcing you to get into the market. Count to 10. And once you finish 10, do you really still want to enter that trade? Or do you want to take a step back, wait for another setup and go again? And 99% of the time, just using that 10-second delay works. And it's really powerful and it's so simple. So there's three main types of discipline that a trader needs. And most traders only focus on one of these, and this is why you guys are stuck. So let me break these down for you. So the first one is pre-trade discipline. This is everything you do before you click the buy or sell, including journaling yesterday's behavior, marking out key levels, writing your bias, choosing your risk for the day, deciding which sessions you're going to trade, and reviewing your emotional status for that day. And pre-trade discipline is what removes the chaos from your trading day. And you need this because most traders just enter the market emotionally unprepared for what could happen. Because if you start the day feeling stressed, greedy, tired, you feel rushed, or you've got it in your mind that you're just going to try and make back what you lost yesterday, then your discipline is already gone. And your brain straight away just goes into reactive mode, not strategic mode. Number 2, and this is the hardest one, and that's your in-trade discipline. This is where you've got to stick to your set stop loss, stick to your target, avoid any impulse entries, trust your setups, and don't just get out because the candlesticks look scary. In-trade discipline is about staying calm within the storm. Just like a professional surfer, they can't control the wave, but they can control themselves on that wave. And yes, emotions are always going to show up when money's involved. But your job is to act according to the plan that you made when there was no money involved, when you didn't have high emotions. Because that is when you were thinking a lot more logically. And discipline 3, which is honestly the most underrated one, is your after trade discipline. After trade discipline is reviewing why you took that trade, identifying any emotional mistakes that you made during that trade or trading session, accepting losses without trying to fix them, stopping after you hit your daily limit. Some brokers are good at this now, and you can set that before you start trading. So if you do hit it, it will lock you out for 24 hours or till the next day. And taking breaks after any trade. And most traders fail at this because they enter straight back into a trade, especially after an emotional trade where you potentially lost a lot of money or even made a lot of money. But the fact is that trading is so high frequency that after your first or second trade of the day, emotionally you're pretty tired. You might not notice it, but your decision making will become a lot worse. So discipline isn't just about your entry and exits, but it's about knowing when to stop trading. And this is the part that you're here for. How do I actually become disciplined? How do I fix myself? And here's the truth. Your brain, it follows patterns. It automatically follows patterns. So you need to trade new patterns in your mind. I'm going to give you 4 practical rules which can really make this happen. The first one, I've already touched on this, is the 10-second rule. Before every trade decision, just count to 10 before you act on that decision. This will let the original emotional spike pass. And you will be shocked just by counting to 10 and saying yes or no after that 10-second moment, how many bad trades you'll actually avoid taking. It's crazy. So 10-second rule. You're thinking about entering, but you're not too sure, count to 10. Most of the time you'll probably say no. Most of the time it's a losing trade that you just said no to. So 10-second rule, really important. Number 2 is daily max loss equals walk away. You really can't have any exceptions when it comes down to this rule, because this rule alone will save your account. Set your daily limit for the week. So every day for this trading week, I'm going to lose 1%. When you're at that limit, you need to walk away, especially because it's a loss. Your brain is already emotional and you're not thinking logically anymore. So trying to revenge trade or set another trade to win it back, it's just not going to work. If it does, it's luck. So some brokers now, especially Top Step that I've just started using, they have a daily lockout limit. So I've got mine set to 1%. If I lose it, automatically locks me out until the next trading day. Obviously other brokers don't have this, so you really got to be strict with your mind. If you hit 1%, delete MetaTrader, sign out your trading accounts, turn your laptop off, turn your phone off, just get away from it. And you'll be surprised, just get away from it, take a 5-10 minute walk outside and just tell your brain, no more trades, no more trades. It works because there's always going to be another trading day tomorrow or in 48 hours if it's a Friday. And number 3 is one setup only for now. If you're really struggling with consistency in your trading, just trade one setup once. Same pattern, same risk, same time frame. Do it until it becomes automatic. And yes, this sounds really boring because you could be waiting days for the exact same setup in the exact same session in the exact same time frame to fall. However, this reduces your decision making, which means your trades are usually winners, and you'll become much more confident within your trade and within yourself because you know that you can stay disciplined with just one setup, one time frame, one currency pair. Just keep it as one per day, one per week, one setup. That's all it needs. If you do that, you're automatically building discipline. And number 4 seems really silly, but write and say your rules every morning before you start trading. This is a trick used by top athletes, top traders, because when you physically write and say your rules each morning, you reinforce them in your brain. And by the time you're actually in a trade and you've started trading, you've already primed yourself to follow these rules. So these things, they all sound really simple to do, and you can try and take action on them as quickly as possible. However, discipline is built over the long term. You're not going to watch this video and you're not going to instantly become disciplined today. You're just not, because you need to practice. That's why I'm doing 10 episodes of this. So hopefully you can sit there for 10 days in a row and you can really just focus on becoming disciplined for the next 10 days. And the brilliant thing is you'll start to notice that your discipline is getting better. And these are brilliant because they're small wins, and you need small wins within trading. Because even if you're losing, even if you're on a losing streak, but you're getting these little wins within discipline, it just keeps you emotionally stable. Whereas if you were taking a losing streak and you knew you were breaking your rules, your emotions are just all over the place, and it's just going to end up in one place, which is a blown account. So discipline is boring because you're trying to stick to these rules when no one's watching you. Rules are meant to be broken. Your brain thinks like that. So it is difficult, but you really need to focus and stick to your rules when no one's watching, because the only one accountable is you. It's closing the laptop early, even if you want to try and take one more trade. It's taking a small loss because it protects your account in the long term. Don't just do a 25% risk trade of your account. You're going to lose. And it's choosing the right decision, not the comfortable one. The comfortable decision in this is to not follow your rules. It's just to press buy or sell, hopefully make a shit ton of money. If not, you lose your account balance. But that's gambling. Download a casino and put your money in there, because you'll have more chance of winning it than you will in trading. So yes, trading isn't comfortable, but if you stay disciplined, it's very good. So you don't become a professional trader by finding the perfect winning strategy, but you become a professional trader by becoming someone who can execute a strategy whilst being under immense pressure. And fear is natural, emotions are natural, but discipline is trained. And the moment you get this right, your trading will transform. You stop fighting with the markets and you just end up working with your plan. And that's where consistency begins. Okay, so welcome back to episode 4 of The Trader's Mind. And today we're going to be talking about something that every trader struggles with, especially really early on. And that's patience. People love to say, be patient, but no one actually tells you how to learn and develop patience within your own trading. Nobody tells you what it feels like, why it's uncomfortable, or why most traders fail at this part before anything else. And patience, it isn't passive. It's not sitting there doing nothing. Patience is a skill. It's a skill that you've got to learn and develop. It's choosing to wait, even though every part of your body is wanting to jump straight in. And if discipline is about sticking to your rules, patience is about waiting for the moment where those rules apply. Today, I'm going to break patience down properly in a way that you've definitely not heard before. So let's get into it. The first thing that you need to understand is patience isn't waiting. Patience is knowing what you're waiting for. Because most traders think that patience is doing nothing until something happens. But that's not patience, that's just being inactive. Real patience is intentional. It's saying, only take this setup in this condition, with this confirmation, and until that appears, I'm not touching the charts. That's patience. And here's a fact. Markets only give clean, high probability setups a small percentage of the time. Most of the day, it's just noise, manipulation, false moves, liquidity games, and just random candles that you don't need to worry about. So if you're trying to trade every single hour of every single day, you're not being patient. You're just being reactive to the market. But a professional trader's job isn't to find trades, but it's to filter trades out. And most traders, they fail not because they lack discipline or they lack the wrong strategy, but it's because they lack patience. And here's why. We live in a world around instant gratification. Everything's fast, food's fast, entertainment's fast. Your attention spans are so short now, especially with the introduction of TikTok, Instagram, YouTube Shorts. And you're getting more used to getting what you want right at that moment. But trading is the complete opposite. Markets move slowly until they don't. Good setups take time until they don't. Opportunities appear random, not on your schedule. So your brain starts to get really uncomfortable and it just feels the urge to do something productive. That's why you jump into random breakouts. You scalp nonsense entries. You force setups that don't even exist. You enter just because you're bored and you want to feel something, you want to get a dopamine hit. And you just take low quality trades because you just want to be in the market just in case. And it's not that you're impatient on purpose. It's because your brain is programmed to avoid boredom. But here's the truth. Boredom is where consistency is built. Boredom means you're finally ignoring the noise. And these are 3 types of patience that every trader needs. If you avoid one, your results will fall apart. So number 1, patience before the trade. This is the hardest one for most of you guys. This is waiting for the setup to form fully. Not half formed or not, it looks like it's going to form soon. Fully waiting for your setup to form. It's waiting for the level to hit. It's waiting for the confirmation. It's waiting for your session. Waiting for a clean structure and waiting for volume to come in. You don't get rewarded at all for early entries. You just get punished. So pre-trade patience, make sure that you're trading a real setup, not just a feeling. And number 2 is patience during a trade. This is where most people panic. This is the moment you've got real money on the line and time slows down. Candles feel bigger, small pullbacks feel bigger, and you keep imagining the worst case scenario. Patience during the trade is letting the setup actually play out. Not cutting it too early because you're nervous, not closing the trade just because of one random wick, and not just bailing out because it took too long to hit take profit or your stop loss. Because good trades, they take time. Even the best and biggest moves, they all have pullbacks throughout that move. And if your analysis was good and you trust it, then all you have to do is breathe and let the trade fully play out. And number 3, which isn't spoken about, is patience after the trade. And this might be the most important one. Patience after the trade means not jumping straight back in, not chasing the next candle, not trying to instantly fix a loss, and letting your brain reset before the next setup or move. You need to give your emotions time to settle after each trade. If you rush into the next setup, you're not trading, you're purely just reacting to your emotions. Because if you took a losing trade, you're going to want to get that money back as quickly as possible. If you took a winning trade, and this is where most of you mess up, you take a winning trade, you get overconfident, you believe your setup, which you took maybe 2 or 3 hours ago, is still valid. The move is still, say, going up. So you jump into another trade. And then what happens? You lose. So patience after the trade is about really protecting the capital you gained during the last trade, or your account balance after taking a loss. And let's talk facts for a bit. Your brain hates uncertainty. It hates waiting. It hates the feeling of, I don't know what's going to happen next or what to do next. And that's why patience feels so uncomfortable, and that's why you react off it. And when you wait or you're bored, your brain releases cortisol, and that's a stress hormone. That's why sitting on your hands feel weird. That's why waiting for a confirmation feels really frustrating. And that's why holding winners feels so tense. But here's the thing. The more you practice patience, the less cortisol your brain produces in these moments. it adapts, it rewires, and this becomes your new normal. Patience is literally a muscle, and the more you train it, the easier it becomes. This is why real traders always look so calm, even if the markets are volatile and they're taking a huge loss. They're calm not because the market is easy and clean. They're calm because their patience has been trained. And here's how you actually build real patience step by step. Number one, limit the amount of trades you're taking per day. If you force yourself to take less trades, you instantly become more selective with each trade you're potentially looking to take. The quality goes up, your impatience goes down. Number two is just set alerts on TradingView and walk away. Stop just staring at the charts waiting for setups. Use the alerts and only return when price gets to your levels that you wanted price to be around. Because you're not trying to be a hostage to the screen. That's not what trading's about. And the best thing is TradingView and their alerts are completely free. So you download the app, mark out your key levels. When price hits it, then you can jump back onto the screen. Number three is just trade one setup and master that setup. The more familiar you are with your setup, the much easier waiting becomes, because you can't be patient with something that you don't understand deeply. So just wait for the one setup to appear. It might only be 3 or 4 times a week, but if you wait, you'll become so much more patient and it will really grow and train your brain. And number 4, count how long you waited before you entered. And this is a really powerful one. Journal how long it took your setup to completely form until you entered that trade. You'll realize that clean setups take a while to actually form. They could take an hour, a few hours to fully form before you enter. This then builds awareness in your brain about how long setups actually take to form. So if something is taking a little bit longer, it feels like a really long time, you have a full journal of these setups potentially taking 4 hours to completely set themselves up. So you're getting used to it. And number 5, learn to be okay with missing moves. This is a really hard one, to be honest. It sounds easy, but it's not. But if you can accept that you're not going to catch every single move, you instantly gain more patience. Because now you're not trying to chase setups. You purely got to wait. Missing a move isn't failure. You could be completely busy doing something else which isn't to do with trading. If you miss the move, it's completely fine. More moves will appear. And if you were actively looking at the charts but you hesitated, don't try and enter the trade at the wrong position. Because more times than not, it's not the setup that you decided on when you didn't have all these emotions running high. So here's the truth about patience. You don't become patient by trying harder. You become patient by valuing long-term results over short-term excitement. You don't need more action. You don't need more information. You don't need more trades. And you don't need better trades. Patience is the difference between gambling and actually trading. It's between hope and confidence, and between blowing accounts and building accounts. So it may feel and look really boring. However, boring trading is profitable trading. And this is where your entire mindset shifts. Okay, so welcome back to episode 5 of The Trader's Mind. Today we're talking about something that every trader struggles with, but actually most people never get to fix. And that's self-trust. And let's be honest, you can have the best strategies, the best setups, the best risk management, and the best psychology. But if you can't trust yourself when it's time to execute the trade, then you're always going to be stuck. And usually it shows up like this. You see your setup, but then you hesitate. You second guess the entry, you wait too long, and by the time you've actually convinced yourself to take that trade, the move has happened. Or sometimes it works like this. You're in a trade and you're in profit. And instead of trusting your plan, you start to trust fear. You close too early and you break the trade management rules that you made for yourself. And you bail out because you don't trust yourself to stay in the trade. And this episode is about fixing this. Because self-trust is the foundation that everything else sits on. And without it, consistency within trading is impossible. So let's get into it. So to be clear, self-trust isn't confidence. It's not feeling hyped or motivated or locked in. Self-trust is, I trust the decisions that I make when I'm calm, more than the emotions I feel when I'm in that moment. That's all it is. It's simple. And when you start to trust yourself as a trader, it looks like this. You take a trade when your plan says to take a trade. You walk away when your rules say stop. You stay patient until your setup comes. You execute without asking 10 different questions in your head. And you accept losses without spiraling into doubt. Self-trust makes you predictable, and predictable traders become profitable traders. Most losing traders, they're not inconsistent because of their strategy. They're inconsistent because they act differently each time an emotion shows up. And self-trust, it removes this chaos. So why don't you trust yourself? Nobody is born doubting themselves, but self-doubt is learned. And in trading, self-doubt usually comes from one of these 4 places, if not all of them. Number 1 is probably the most common. You've broken your rules way too many times. Because every time you break your own plan that you wrote yourself, you tell your brain, don't trust me because I don't stick to what I say. And eventually your mind stops believing you and the actions that you do when you don't have an emotional mind. Number 2, and this was huge for me, is that you had a huge loss in the past. Because big losses, they don't just hurt your account, but they hurt you physically and mentally. And after that one big loss, every decision you make, it just feels dangerous. Me, myself, I had just enough money for my rent and my bills that I earned in my sales job to last me around 3 to 4 months without having to earn any other commissions for that time frame. I was also trading at this time, at the start of my trading journey around 2 years ago, and I put this all into a trading account. 2 days is all it took for me to lose everything. And to pay my bills and my rent for the next 3 months, I had to take credit cards, I had to take loans. So I put myself into massive, massive debt from this huge loss. So it wasn't just the loss of the account, it was the loss of almost my life for at least 6 months to a year because I was paying it off for a long time. And after this, it creates a huge hesitation with my trading. I really had to sort that out. And number 3, especially in this modern age, you rely too much on outside validation. You rely on signals from scam Telegram groups. You rely on YouTubers. You rely on Twitter trades and Instagram. And you're relying on other people's bias. And what happens is your brain and your mind gets used to outsourcing decisions to these other sources. And because you've been doing this now for quite a while, you can't even trust your own judgment. How many of you, before you enter a trade, you're looking on TradingView, and for example, if you're trading gold, you go onto the gold chat in TradingView. You might think about putting some longs in, but if 5 or 10 people are talking about selling, that confuses your mind. That ruins what you thought was correct. And this is where you really start to doubt your own judgment. And number 4, this one's really important and not really spoken about, is you haven't built enough evidence yet. Because self-trust, it comes from repetition. Because if you've only taken your setup potentially 20 times, your brain probably hasn't had enough solid proof yet that that actually works. And that's why you keep looking for the next strategy, because after 20 goes, your brain just goes into shutdown mode on that strategy. But you need repetition, you need a lot of data, a lot of evidence. I look over data from almost 4 years of me trading. I still have the data for my original trades. Yes, they were a lot more low quality, but it's data for myself. And I can look at that data and trust it because it's completely real. And this is how the lack of self-trust really ruins your trading. What happens is you start to hesitate on good trades. You wait for a 2nd, 3rd, 4th, 5th confirmation before you enter. By the time you have, you've either missed the move completely or you've entered at a complete wrong price point. You end up closing winners way too early. You don't trust the target you set, which most likely was a key level on the chart. You just start to trust your fear instead because of one potentially red candle, and your brain just goes into overdrive mode and you end up not trusting the setup anymore. You end up moving stop losses just once. And this can go both ways. You either are in a losing trade and you don't want to take the loss, so you move your stop loss down even further, or you just remove it and just pray to the trading gods that the trade goes back into profit somehow. Or your trade is actually running in profit and you potentially move your stop loss to break even, or potentially 10 or 20% plus of the trade that you were trying to take. But more times than not, that stop loss gets hit and it just carries on going. You set that stop loss originally when you had a clear mind, so keep it there. You also start to switch strategies every single week because you start thinking the problem is your system, your strategy, when it's actually just your ability to execute. Because if you think about it like this, if you didn't even look at the charts and every trade you set yourself had a 1 to 3 risk to reward ratio, you have a 50-50 chance whether you press buy or you press sell. So statistically, over time, you should have somewhere around a 50% win rate. And this is with no strategy at all. And if you keep getting 1 to 3s constantly, you'll most likely be profitable. And that's with zero strategy. So you don't need to have a strategy for trading. You need to have a strong mindset. And you keep looking for external confirmation. You keep asking people what the bias is. You're looking at other traders' analysis because you don't trust yours. And for example, you're trading gold, because this is what I trade mostly. You go potentially straight onto TradingView and you open the chat up. On that chat, you've got people saying, it's bull, it's bear, it's bull, it's bear. And you just don't know what to do, but you had your confirmation before. You're now looking at this chat, it's now confusing you. But you've got to remember that these traders, some of them are brand new, some of them are very experienced. You don't know who is who. They all have different strategies, they all have different setups, they all have different reasons for entering. Some of them aren't using leverage. You potentially are. Some of them are entering for a potentially week or month-long hold. You're potentially entering for an hour's hold. And also, you might see something in the chat saying enter at $4,200 on gold. You've got to remember that futures and XAU USD have different prices. They're not at the same level. So you could potentially be entering at a complete wrong point because someone else said, and they might be trading futures where you're trading the commodity. And another one is you're just overcomplicating your charts. You think that using more indicators is more safety, except it doesn't, it confuses you. Because if you're trying to wait for 10 confirmations on 10 different indicators, one, you're never going to enter a trade. And when you do, you're going to be so confused with that trade. You don't know what's going on. You don't know how to understand 10 different indicators because there's so much what goes on behind each indicator. So stop just trying to put as many indicators on your chart as possible. Keep it clean. The only indicator I use are trading sessions. The rest I use are just the rectangle box and the lines. That is all I use on my trading charts. I keep it super simple. And here's the truth. Self-doubt, it makes you trade emotionally. But self-trust, it makes you trade professionally. So, how are you going to build an unbreakable self-trust in yourself? This is the part that is rarely talked about and taught to people. So I've broken it down into 4 simple and easy to follow steps. Number 1, keep your promises small. Don't try and transform everything in one single day. It's not going to happen. Just start with, I'll just take A+ setups today, if one appears. I'll stop after my daily limit. Or I just won't look at any signals today when I trade or any chats. Every time you keep that promise to yourself, you build self-trust. Every time you break one, you end up chipping away at it. So start small, stack wins, 1% better every day. Number 2,
Journal your reasoning behind the trade, not just the results. Write down the reason why you took that trade and how you felt during that trade, not just what happened with the results. When you see your logic clearly written, you start to trust the logical version of yourself, and this builds internal reliability. Number 3, backtest your system until you know it blindfolded. Self-trust comes from evidence, cold hard, repeated evidence. When you've seen your setup work hundreds of times, your brain stops panicking because it knows the probability if it's going to be a winning or a losing trade. And people say trust your strategy. It's hard to trust your strategy if you don't have enough evidence of that working. And number 4, accept imperfections. And this is big. You'll always have fear. You will always have hesitation sometimes. And you're always going to have emotional days to do with trading or not to do with trading. Self-trust doesn't mean that you never doubt yourself. It means you can execute even when the doubt shows up, because you end up trusting the process, not the feeling. And here's the shift that turns everything around. Stop trying to feel confident before taking action. If you take action, confidence always follows. You're not going to trust yourself at first, but you will end up trusting yourself after proving that you can act properly under pressure. And self-trust is just built in the small moments. It's built by following your plan. It's built by taking the small loss. It's built by staying patient while the charts are boring. And you don't need to be fearless with your trading. You just need to be confident. And self-trust, treat it like a muscle. Train it daily. Once you build it, the hesitation fades, the noise quietens, and you can finally trade like the version of the trader that you've always wanted to become.
Okay, so welcome back to episode 6 of The Trader's Mind. Today, we're diving into one of the biggest differences between consistent traders and emotional traders. And it's probably something you're battling with right now. And that's impatience versus impulse. If you can understand this one thing, then your entire trading will change. Not your strategy, not your indicators, but your behavior. So let's get straight to it. People think impulsive trading is a bad habit, but it's not. It's much deeper than that. Impulsive trading comes from fear. It's the fear of missing out, the fear of not catching the move, a fear of not making enough money, and the fear of almost feeling behind. Your brain hates uncertainty. So the moment you see a huge candle wick up or a level almost breaking, your brain literally fires up a fight or flight impulse, and it wants you to do something. And your impulses, they're not random at all. They're survival instincts, disguised as trading decisions. And the market loves traders who act emotionally, because that's where all your liquidity sits. And here's the ugly truth. Every impulse trade ends up the same way. You're either early or you're wrong. And the worst thing that can happen is when an impulsive trade wins, because that tricks your brain into thinking, see, that behavior is rewarded now. So then the next impulsive trade you do is even bigger, and it probably will lose. But impulse trades don't just lose you money, they build really bad behavior. And once that behavior is wired in, it's really hard to remove. So patience in trading doesn't mean you're just sat there doing nothing, because people mistake patience for passiveness, and you're not trying to be a passive trader. Patience means waiting and watching for the version of the market that matches your trading personality. So what do I mean by this? Not every session is yours. Not every move is yours. Not every breakout is yours. And not every trend's yours. Your job is simple. Wait for the trading environment where you perform the best. This might be really high volume sessions. It might be retests. It might be pullbacks. It might be breakouts after a liquidity sweep. Patience means you know what you're good at, so everything else is just noise now. So what's the real psychology behind patience? Because patience isn't a skill. Patience is a certain mindset. It means that you've accepted these truths.
You will not catch every move. You will not be in the market every time a move happens. You're not competing with everyone. And the market will always be here tomorrow. When you internalize these beliefs, patience becomes effortless almost. So stop chasing and start choosing. So let's break this down into actionable steps. And here's the tools that you can start using today to start building your patience properly. Number one is you need a non-negotiable list. Write down the exact criteria your setup must have. If even one of these pieces are missing, you do not take a trade. No exceptions, no bending the rules, no one-time trades, because non-negotiable means non-negotiable. And to build the correct psychology, you cannot lie to yourself. You need to hold yourself accountable, and you cannot break your own rules that you wrote yourself, because I didn't write them, you did. Number two, I've spoken about this before, but it's a 5 to 10 second delay. But this one is extremely powerful. Before you enter a trade, just pause, count to 5 or count to 10. Force yourself to recheck the setup. Ask yourself, is this really my setup, or am I just acting impulsively? And I've been using this for around 6 months now, and using this rule has saved me thousands of dollars. It seems really simple, but when you start using it for every trade, it really helps out. And number three, journal your impulses. Don't just journal your setups, don't just journal your wins, and don't even just journal your losses. Journal your impulses. Write down what triggered you, what you felt, what you were scared of, and what the outcome was. Because when you see your impulses written down, you instantly become more disciplined, and it exposes the behavior that you've been ignoring for a while now. So every trader has a moment where something clicks, the turning point, where they go from chasing trades to waiting for trades. And that moment comes when you finally understand the market does not reward urgency, but it rewards discipline. Patience, it's not sexy. Patience is boring, it's slow, and it is really uncomfortable sometimes, but it is what works. So you're not instantly going to become patient overnight, and it's going to be really hard for you to get rid of these impulses straight away. And that's why taking this slowly, not trying to rush into anything, is the best thing for this. And remember, you're not alone. Every trader struggles with impulses. I sometimes still get impulses to enter trades. And this is where these kind of 3 set of rules really help out. So journal your trades, count to 10, and create a non-negotiable list. Write it down every day. So as soon as something gets hit, you tick it. Say you have 5 non-negotiables on that list. As soon as the 5th one gets ticked, you're ready to enter. If that hasn't been ticked yet, do not enter at all. And as I said, it may seem boring, it may sound annoying, but it's what builds your consistency. It's what builds your patience. So you're not trading these impulsive trades that you usually end up losing. So if you are struggling with these, don't worry. You're not broken, you're not a bad trader. It's just human to feel this way. Every trader goes through this phase. Some choose to fix it and some don't. The ones who choose to fix this are the ones who go on to full-time trading, and the ones who get to their goals much quicker. The ones who don't fix it will always be stuck in that same rut. And patience, it isn't something that you force. It's something that you need to build. It's going to take time. But if you start today, just get 1% better every single day. So, welcome back to episode 7 of The Trader's Mind. Today, we're breaking down one emotion that everyone deals with, and that's doubt. And honestly, doubt will ruin more opportunities than fear ever will. Doubt is the emotion that makes you hesitate before every setup. It makes you second guess your analysis, and it makes you close trades way too early. And worst of all, doubt stops making you trust yourself. You can have months of experience, but one shaky day can ruin your whole confidence. So why do you feel doubt while trading? Doubt usually comes from 2 main sources. Number 1 is you just had a bad trade, or you just had a bad trade the day before. You take a big loss or a loss And now every entry suddenly just feels off and it feels wrong. And number two is you've got too much information. What I mean by this is you've just watched 5 different YouTube videos on setups and strategies. You're looking through Discord, you're looking through signal groups on Telegram, you're on the TradingView group chats, and you're seeing what some of the trading influencers are also doing. And now you've got 20 different voices in your head telling you completely different things on what to do. And this creates analysis paralysis. You have way too many options, but not enough clarity. So how does doubt destroy good setups? And here's the truth. Most traders don't miss setups because the market wasn't right, but they miss the trades because their mindset's not right. Doubt makes you enter way too late and exit way too early, or you just avoid the trade completely. But some of the biggest and best trades that I've ever done is the trades that I've been the most doubtful about. Not because I was risking big and I was risking more money, but sometimes deep down you know you're correct, but you have so much doubt because they're the times where you're looking at what other traders are doing. You've got to stop that. And doubt can cause a lot of issues with your trading, like I said. In a way, it also causes you to overtrade. Because what happens is, say you take your setup and you're looking for longs. You enter the trade, but then you see someone saying they're shorting. You then think, oh my God, they're shorting, I need to potentially look at shorts as well. So what you do is you up your stop loss. So now your trade is really tight and it's against everything that you looked at when your emotions were straight. What happens is, yeah, it might come back down, it hits your stop loss, and then as soon as it hits your stop loss, you're like, right, time for shorts. What happens then? You enter a short position and the trade goes up. Exactly what you thought was going to happen, but you had so much doubt because you had so much information from other traders that you didn't know what to do. And the thing is, most of the time, these traders aren't experienced. So you're taking advice from someone you don't really know and a trader who doesn't have that much experience in the markets. So how do you fix doubt? So the opposite to doubt is confidence. But as you know, you can't be overconfident with trading because that also kills accounts. So there's a really fine line of being confident and being overconfident. So the first thing to remove doubt is, so even if you stopped watching, say, tons of YouTube videos on setups, that's not going to remove any of your self-doubt. You remove self-doubt by building evidence that your system and your setups, that they work. So you build this confidence by only trading when it fits your trading plan. Every time that you follow and stick to your rules, and every time you stay patient instead of jumping straight into a trade. And now you're proving to your own brain, yes, I can do this. And that really starts to quieten down the doubt that you have. It's these small wins that you get every single day. You don't need to be doing huge trades. Even if you take a losing trade and you stick to your rules, it's a small win because you stuck to your rules. And those small wins, they build up confidence. Big wins build up overconfidence. That's the difference. So here's something that really helped me massively with my doubt in trading. But to use this, it's really simple, but you cannot lie to yourself. And it's just by asking yourself one simple question. Does this trade fit my plan? And on my personal trading plan to enter into a trade, I have 4 things that I tick off before I enter. For you, it might be 2 things. For others, it might be 10 things before they enter a trade. But for me personally, it's 4. I'm not going to tell you what they are because I don't want you to start doubting your system. But what I do is I look through those, I tick them off. And before I enter a trade, I say, does this trade fit my trading plan and my trading rules? The answer is yes, I take it. The answer is no, or say I'm 1 tick away from entering the trade and it becoming a yes, I still wait and do not take the trade. It's as simple as that. There's no maybes, it's yes or no. If everything's been hit, it's ready to take. If, say, 3 of my things have been hit, but I'm still waiting on 1, I do not take the trade because it's not ready for me to take it yet. And it's really simple. It's yes or it's no. And it needs to be simple because doubt is really powerful, but only when you let it become powerful. That's when you start negotiating with doubt. And when you start negotiating with doubt, that's when it takes over. And that's when you feel all of these emotions. But yeah, the biggest thing to remove doubt and become confident is just become more consistent with your trading. And to be honest, more consistent within your life. And not many traders talk about this, but being consistent in trading is one thing. Being consistent in your life and trading is a completely other thing. Because it's simple things. If you're not eating healthy, going to the gym at the same time, waking up, making your bed, cleaning your house or apartment, you're not being disciplined within your own life. So how do you expect to only be disciplined whilst trading? It just doesn't work. So as soon as you become disciplined, you then need to start following your rules that you set yourself. You need to become patient. Patience removes fear. And once you start trading, it removes doubt. And yes, you are going to get a bit of doubt after, say, a 3 or 4 trade losing streak. But that's when your discipline needs to kick straight back in. And as I said, if you don't have discipline at the very beginning and top of your life, then when you really need that discipline push, when you're feeling doubtful, then your trading is going to crumble. And that's why most traders fail. Because I've said it many times, trading isn't hard. It doesn't need to be complicated. The actual thing of trading is you have a computer, you have your phone, you press buy or sell, and it either hits your stop loss or your take profit. It's very simple. But the complicated parts are the psychology behind trading. That's why I'm making these videos, because it's something that it took me 2-3 years to fix my psychology. For you guys, it might take a few months. Other guys, you're never going to fix your psychology. And if you believe you're one of those people who will never be able to change, just take it from me and stop trading and try something else. Because I get it, trading is a hype at the moment, trading is popular, but there's no point you trying to force something that you know you can't do. And I'm not trying to look down and I'm not trying to talk bad, but trading is easy, but the psychology is extremely hard to get right. So I know I've just yapped on a little bit there, but it really annoys me when I always see, when I go onto Instagram or TikTok or YouTube, and the strategy videos are getting millions and millions of views, but the psychology videos don't even get half of what the strategy videos do. And I'm not saying that because I want more views on my videos. I just do these videos because I enjoy making them and it takes me away from trading. It gives me a break. But it annoys me because you've got all these guys looking to learn how to trade, but 80% of trading is psychology. People repeatedly get told this, but they don't take action to fix their psychology. They think it will just come with making more trades, but it really doesn't. And here's a great example on why psychology is so important with trading. So one of my good friends is an extremely good trader. They took a trade the other day. They're a swing trader, so they take trades over a few days. Lost an insane amount of money, hundreds of thousands of dollars in one single trade. And this, I believe, was one of the biggest losses that he ever took. But guess what? He did not overtrade. He did not revenge trade. And he just took a few weeks off of trading itself. It's that simple to help build your mindset, because he is a disciplined trader and professional. You guys are risking a load of money that you really can't afford to lose, and you keep thinking you're losing because it's the setup and the strategy you're using. It's not. You're losing because your psychology and your mindset is just wrong for trading, and you need to build it. So I know I just spoke on there for quite a while, but I just want to show you guys the importance of having a really strong mindset within trading, and that it needs to be your number one focus to become a successful trader. Okay, so welcome back to episode 8 of The Trader's Mind. Today we're diving into something which I believe is one of the main cores of trading psychology, and that's self-belief. Not motivation, not confidence from wins, not hype, but real subconscious self-belief. The kind that actually changes the way that you trade on the charts. Because I'll be honest, most traders don't fail because they're bad at trading or their strategy doesn't work. I've said that a million times now, and it's true.
Most traders fail because they can't trust themselves, and that's when they end up breaking the major rules in trading. So you always hear that quote, believe in yourself, and think it's all quotes and positivity. But in trading, self-belief is completely different. Self-belief is when you can hold a winner without panicking. You can take a clean loss without spiraling out of control. You can stick to your rules even when you don't want to, and say no even though you want to force a trade. It's not loud confidence, it's not jumping onto every trade because you believe in yourself so much that you're going to have a 100% win rate, and it's not celebrating every win. Self-belief in trading is quiet and it's really controlled. And most people get confused with ego and confidence, and they're two different things. Because ego is when you're almost trying to prove your confidence to somebody else, but self-confidence and self-belief is when you're trying to prove it to yourself and only yourself. This is where people get muddled up. And this is, if you have ego, this is when you start losing. So let's talk about why you don't have any self-belief. Number one is you judge yourself too quickly. You have one bad trade and you think your strategy is now completely broken and will never work again. Or you have one losing trade and you just feel like you're not made for trading and you just quit altogether. And you've probably done this. I've done those so many times. The amount of times where I said I was going to quit and give up on trading is, well, I can't even count it. It's too many. But if you think about it this way, a losing day doesn't take away from your experience. Every day you trade, every day you're on the charts, you gain a bit more experience. So a losing day is just giving you more experience. It's what you want. So even though it might seem bad on the cover of it, deep down, it's a good day because you're now more experienced. Because you don't suddenly become a worse trader after one bad session or even a losing streak. It's just how trading goes. Trading is probabilities, and the probability of you having a losing streak is there, and you will have them. And trading isn't a one-day sport. It's like going to the gym. You need to be consistent, and you need to repeat everything the exact same again and again and again. And think of it, as you're building muscle, as you're building capital, you can add more weight, which means you can add more lot sizes. And that's how traders grow. So stop thinking you can lift 200 kilos when you can't even lift 100 kilos. But being disciplined will get you to that 200 kilo mark. Same with trading. Another reason a lot of traders lack self-belief is comparison. You look at other traders online and you see them making thousands of dollars or hundreds of thousands of dollars per trade, per session. And you instantly just feel behind. But what you don't see is the years of losses, the blown accounts, and the stress that is all behind becoming a profitable trader. And that is exactly why I don't share any of my profits with you guys, because it's enough for me to live on and have a very nice life here in Dubai. But am I going to share that with you? Because you guys, if you're watching the videos and wanting to learn on your strategy, are honestly probably a little bit more behind me. And then if you see me making X and you're only making Y down below, you're going to try and want to reach that X as quickly as possible. And that's when you start comparing yourself and you end up losing because you're trying to get there too quickly. So comparison really does destroy self-belief before anything else. So I'll tell you something from my own trading journey. There was a point where I genuinely felt that I couldn't be consistent in trading, because every time I made a little bit of progress, I then slipped up, but my slip-ups were big slip-ups. And then every time I thought I'd mastered something, say I mastered my discipline, I was only doing one trade a day, next week I'd mess that all up on the first trading session. I put in like 5 trades. And I just used to think to myself, I'm really not built for trading. It's not what I want to do. It's not what I can do. And I honestly don't know how these other people are making money. But there was nothing wrong with my trading. And I can look back at it now and strongly say that my strategy was very strong. It's almost the same strategy that I use right now, and it works. But what happened is I couldn't trust myself. I had no self-belief, and I just couldn't stick to my own rules. The day that changed was the day where I decided to stop trying to be perfect and just try to be consistent, and not with profit and loss consistent. I mean consistent in following my rules and following my plan.
So there is a bit of science about self-belief. So confidence doesn't come from being good, but it comes from repetition, because your brain becomes more confident when it becomes more comfortable. So your brain becomes more confident the more familiar something feels, not the more successful it is. Meaning you don't build self-belief by big, huge wins, but you build it by repetition and doing the right thing over and over again. And the right thing doesn't mean winning the trade. It just means sticking to your plan, your setup, and your rules. And then what happens is your brain then starts treating this like a good, solid routine. So if you walk away when you're supposed to, your brain then sees this as control. And if you journal honestly, then your brain starts connecting your behavior with your outcome. So self-belief and confidence is literally a pattern that your brain recognizes. So let me list a few signs why you might not have self-belief yet. You cut your winners way too early because you think they'll reverse on you. You hold losers because you just don't trust your stop loss and you remove it. You hesitate on entries all the time. You don't trust any of your biases even though they're completely clean. You overtrade just to prove something, and then you just change your strategies all the time as well, like weekly and monthly. None of that comes from a lack of skill. It just comes from a lack of self-belief. So how do you build real self-belief within yourself? Let me just give you the steps. Number one is just show up every single day, even if it's for 20 minutes. Self-belief starts when you start keeping promises to yourself. Number two is journal honestly, because most of you guys, you might journal, but sometimes you still lie to yourself in your own journal. You leave things out or you sugarcoat it a bit, but you really need to write down the truth, even if it makes you cringe. Number three is you have to keep your risk fixed. If your risk is always random, then your emotions are going to be random too. Controlled risk equals controlled confidence. 4 is celebrate small wins. 1 clean session, 1 good hold, 1 avoided trade. These matter a lot more than you think. They matter a lot more than the big wins. Don't celebrate the big wins, celebrate the small ones. Number 5, you should know this by now, but don't revenge trade. It's literally the fastest way to kill your account and ruin your self-belief. And every time you revenge trade, you teach your brain that you can't trust yourself, you have no confidence, and you just spiral. Revenge trading is literally the worst thing that you can do. And number 6, focus on habits. You can't control any outcome of any trade. You just can't. But you can control your actions before, during, and after the trade. Self-belief comes from trusting the actions that you take and not what you see on the chart. So when you finally build a real self-belief in yourself, trading changes completely. You stop rushing trades, you stop panicking mid-trade as well, and you just stop forcing at everything. It just comes naturally. The market becomes calmer, your mind becomes clearer, and your reactions slow down a bit. You don't suddenly become the perfect trader, but you are now being a more controlled trader, and it's controlled traders who win. So yeah, if you are struggling with trading and self-belief, it's not your strategy, it's not the market, it's not your broker, and it's not your entries. Ask yourself, do you actually trust yourself? If the answer is no, that's absolutely fine, but it's something you know that you can build on. And by knowing that you don't have self-belief, you're literally halfway there to having that self-belief. All right, guys, welcome back to episode 9 of The Trader's Mind. And we're almost at the end of the series now as well. And today we're talking about something that quietly kills more accounts than discipline, fear, doubt, and honestly, a bad strategy ever does. We're talking about ego. And trust me, every single trader gets caught by ego, including myself. Before we get into it, I just wanted to say I really appreciate everyone following along with the journey and following along with The Trader's Mind. These videos are as much for you as they are for me as well. So let's get straight into it. Ego isn't walking around thinking you're the GOAT. It's way smaller and it's a lot more sneaky. Ego is when you start to almost prove something with every single trade you take. You're trying to prove that you were right,
You're trying to prove that you can win back what you've lost and prove to yourself that you're still a good trader. And it's when you catch yourself saying stuff like this when you're trading, it will reverse soon. Let me hold it a bit longer. I can't take this loss. It will ruin my confidence. And I'll get this all back in one trade. And if you've ever said any of those things, congratulations, you have met your ego. And let me be real with you for a second. My biggest losses, the ones that really hurt, they weren't at all caused by bad strategy. They were purely caused by my ego and my emotions stepping in. And it still gets me now as well, because when I first started doing YouTube only around a month ago, I felt this pressure like I have to be a really good trader and that I can't lose because everything is now on camera. And because of that pressure, I held losers for longer. I chased trades that I really shouldn't have taken. And I just forced setups that weren't there. And this wasn't because of my strategy. It was purely because of my ego. Because I didn't want to look like I messed up. But the market doesn't know me or you. It doesn't care about me or you. And it's not impressed by what we do. And yes, luckily for me, I've got myself out of having big ego before. So I saw it straight away and I completely flipped my mind. However, you're probably not at that stage yet where you can almost see your emotions and know what steps to take to fix them. So why is ego so deadly in trading? It's because ego instantly replaces your trading plan. And once ego starts showing up, you can't see the charts clearly anymore. You start taking things personally. You want revenge. And you just stop protecting your capital. You start full porting. And that moment where you're trying to prove something, that is the moment where you're no longer trading. You're just gambling now. And this isn't just me saying this. There was an actual study done that over 75% of retail traders increase their risk after a losing streak. Not because they found better setups, not because they've doubled their capital, but because they're trying to prove to themselves that they can win it back. So it's not strategy that's kind of playing into this. It's all about your own pride. And here's the craziest part. Once ego is triggered, it doesn't let go. You just get caught in this big loop. You take a loss, then you feel the need to win. You take a bigger loss, then you need a bigger win and you feel the need to take a bigger trade. And then you blow the account. It's as simple as that. And that's the loop that you get stuck in. You can't say that you've not been in this loop because every single trader has been in this loop. I have multiple times, hundreds of times probably, and so have you guys. And when people say trading is hard, I instantly think of this loop that you get stuck in. I believe this is the hardest thing about trading and the hardest thing to actually break out from. So, how do you actually remove ego? You have to fix it by changing your habits. It's the only way. And these are some things that genuinely helped me. Number one was decide my risk before the trade. By this, when I was looking at taking a trade, I'd be like, right, I want to risk 1% of my account on this trade. So I set my stops at the correct place and I set my take profit at the correct place. And then you've got to force yourself not to edit these at all whilst in a trade. Because you set this risk whilst you had a clear mind, while you didn't have ego talking. And then if you do lose, you were prepared to lose that amount. So it's not a big deal when that one loss happens. But it becomes a big deal if it went straight past the place where you originally set your stop loss, and now it's going even further. Now you're losing even more. And that's when it becomes a big issue because you weren't mentally ready for that loss. So now that you're in it, it's really difficult to get out of it. So you need to decide your risk before the trade and you need to stick to it throughout the entirety of that trade. Number two is only increase lot sizes after a long period of consistent winning, not losses. This is because ego always wants you to size up after taking a loss. And that's what completely destroys accounts. Because, for example, it's a very simple analogy, but if you put $100 into a trading account and you lost $50, you lost 50%. Now, if you want to get back to that $100, you now need to make 100% of your trading account to get back to your original level. So that 50% loss, now you've got to make 100% to get it back. And that's where your ego kicks in. That's where it wants you to double your lot size so you can do almost the same trade, but hopefully get back to break even as quickly as possible. But it really doesn't go that way all the time. So what I do is I set myself targets, like especially like over the weekends or on holidays, after potentially 3 months of winning, consistent winning and profits, then I'll look to size up. That's how long I look at sizing up for. I don't size up every week. I don't size up after every winning day. It's literally every 3 to 6 months I'm looking to size up my positions. But ego wants you to do the opposite of that. And that's where you've got to be really strict about not sizing up any positions. If you just trade with one lot of gold, you keep it as one lot of gold. If you're in a losing streak, you can reduce it to maybe 0.5, 0.75 lots, but do not increase your lot size. And number 3, stop treating trading like their performance reviews. One losing day does not mean anything. Your goal is to collect data, not to try and impress the market or impress your friends or impress your family or even impress yourself. Your goal is to collect data with your trades. You're building a big body of work. You're not trying to win trader of the day, because guess what? There are no trophies for trader of the day. So stop trying to make every day your next biggest trading day, because it's just not going to happen. And you've got to think to yourself as well, if you have a 60% win rate, you're going to be losing 4 out of 6 trades. Now, after each of these 4 losses that you're guaranteed to have now, you can't be up in lot sizes or up in your risk or anything, because you know that you will eventually have your 6 winning trades, but you cannot start upping stuff because you're just going to end up blowing the account. You're just going to completely lose it all. So stop treating it like a performance review and you're trying to win trader of the day. It doesn't exist. Keep it consistent, keep your losses small, keep your risk tight, don't size up, because the winning days, they will come. And those are the days where you can't let ego step in as well. So throughout the entire video, I've purely spoken about ego after you've taken a loss. Now, I just wanted to mention ego after you've taken a win as well, because this can really, really affect you. So say you had a winning day, you made, I don't know, 3% of your account. You then feel amazing, you feel excited, you've made a decent amount of profit. But what happens is instantly your ego kicks in and you almost want to trade again because you've just had this win. You want to trade even more. You want to get even more money. And then ego steps in, you place another trade, you then lose that trade, and then you want to try and get back to the original profit that you made. You enter another trade and you lose all the profit you made that day. Or you take that second trade, it wins. Now your ego is huge because you've now won 2 massive trades in a row. So what does your brain think the next trade's going to do? It thinks it's going to win big. And that's when you break all your rules, you over risk, you over leverage, and it loses and you lose everything. And there will always be that time where you're overconfident. Your ego is huge because you've had these big winning trades and then one trade wipes them all out. So yes, ego plays a part when you're taking losses, but ego also takes a part when you're winning. And that's why it's so important to have like a 1 or 2 trade max a day rule. Because if you can limit the amount of trades that you're taking per day, you'll find better setups. Your ego will be smaller. After a nice win, you can just shut your laptop and enjoy your day. You don't need to be worrying about when the next huge trade is going to appear on that trading session or in that trading day. So ego comes in 2 ways, after a loss and after a win. So control your ego, know when it's actually happening, know when you feel ego, and once you know you're feeling it, that's your time to step away from the charts and just walk away, because there's always going to be another trading day. So try to balance your goals, your emotions, and the pressure that you put on yourself. Follow your rules. I know it's easy for me to say it, it's a lot harder to actually put into practice. But the more you practice it, the more you repeat it, the easier it will become to control all your emotions and specifically ego. All right, so welcome back to the 10th and the final episode of The Trader's Mind. This whole series has been me pulling back the curtain about what actually goes on inside the head of a trader, especially me, who's been a trader now for 4 years and has been doing it full time for around 3 months now. I started this series because everyone talks about entries, indicators, and different strategies, but no one talks much about the mental side of trading. The fear, the greed, the ego, the discipline that you need, and the emotional cycles that you go through. And if I'm being real, this series wasn't just for you guys, but it was for myself as well. Because when you say these things out loud, when you break them down and when you go through your own behaviors, you become much more aware of it. And that's really helped me as well whilst making these videos. So today's episode is more of a wrap up of everything we've spoken about for the last 9. It's not going to be a motivational speech, but it's going to be a truthful summary of the mindset that you need long term to be a successful trader. So people think trading is stressful because of the losses that you could potentially have. And honestly, that's just not true. Trading is stressful because it exposes the parts of you that you've been ignoring. It exposes the impatience that you didn't know you had, the ego that you didn't think you had, the lack of discipline which you thought you had under control, the impulsiveness that you just give into day to day, and just the emotional roller coaster that you've never really had to deal with before. That's the thing, trading makes you grow up a lot quicker than anything else. Because if you don't, the markets are just going to punish you immediately. There's no safety net, there's no HR department, there's no salary and no manager. It's just you. It's just you and your decisions. So when I recently quit my job and went full time into trading, I thought I knew everything there was to know about trading, and especially the psychology. But the reality, you're never truly ready until you wake up and realize the whole day depends on you. Your decisions, your actions, your mindset, it's all on you. And I learned these 3 huge lessons, which I'm going to speak about now. So number 1 is you don't need to trade more. You need to feel less pressure. Because at the start, I felt guilty if I wasn't trading every day and if I wasn't placing multiple trades a day to try and get as much money as possible. And it felt like if I was not trading, I was resting. And if I was resting, then I was failing. But the truth is the best days that I've had, they've come from waiting for the right setups, potentially over a couple of days, or at least a few hours. It's the ones where I really took my time and haven't tried to force anything. So waiting is the skill, and yes, it is very uncomfortable. However, if you learn not to try and trade every day and just trade when it's right, trading becomes much easier and much more profitable. Number 2 is small wins are so much better than having big expectations, because trading isn't about trying to play the lottery. It's not trying to get the next biggest trade that you've ever taken or that any of your friendship group has ever taken, because realistically to get to that point you're going to have to lose so much before you actually get there. So with trading, you've just got to do small wins. You've got to get 1% better every day. Because if you try and do it too quickly, you're going to almost skip steps that you almost need to do and you need to fail in. And if you try and get there too quickly, you're just going to end up failing, and your emotions and psychology is just going to become a wreck. So just improving 1% every day improves your trading over the long term and improves your mindset, because now you're noticing each of these small things that you do each day to improve, and you just become more confident and you have more self-belief in yourself, because you know you are improving. Slowly, but you are improving. And that's the thing, trading, it rewards consistency. It doesn't reward huge, massive days where you might do a 10 or 20% trade of your account, which is huge. But trading doesn't reward that. Trading rewards consistency. And number 3 is your environment affects your decisions so much more than you think. And there's so much which can be affected by this. It could be just having no discipline in your current life. If you're not going to the gym, if you're not eating healthy, if you don't have a routine, then how do you expect to be consistent and disciplined and have a routine within your trading if you can't do it in your life? So the first thing is you need to change your routine if you're not disciplined already. Also for me, living here in Dubai is amazing, but there's so many distractions. There's the lifestyle, the pressure to make it, and you're always comparing yourself to others. And all of that just bleeds straight onto your trading. Just like where you start comparing yourself to other traders and you're comparing profits and you're comparing trades. And as soon as you almost start comparing everything you do to every other trader, then it's going to really start to affect you in a bad way. I learned that having a strong mindset isn't just what you think, but it's also where you put yourself and who you choose to surround yourself with. If they're all negative, then you'll have a negative mindset. A negative mindset in trading most likely means you'll start losing very quickly. So obviously you guys are watching this because you want to be successful in trading. But what's the real truth about being successful over the long term doing this? And it's just one simple truth that for some of you guys can be really hard to accept. And that's you don't become a successful trader from learning more, but you become one by unlearning all the bad habits that you picked up. Just like rushing, getting FOMO, revenge trading, needing to make it back, ignoring stop losses, over-risking, oversizing your trades, and just getting attached to the outcome. And the worst one is when you think that you've finally become fixed, that there's nothing else that you need to improve on with your psychology. That's the worst one, because no trader is ever fixed. It's constant progress, because to get your psychology right isn't just a quick flip of a switch and you have one light bulb moment. It's constant progress. It is getting that 1% better every day and really putting your mind to it. And it's just constantly improving every single day, or trying to at least. So if you watched all these episodes, or even one, I hope that you walk away understanding this. Trading isn't about being perfect. It never is, and it never will be, but it's about being aware. Because once you're aware of your patterns and your insecurities within your mindset, you can finally start to try and control them instead of letting them control you. And once you start to control this behavior, everything else starts to become easier. And I mean that as in everything within your trading, and also just everything in general in life. It becomes easier because you now understand yourself a lot more fully. So if you watch this series all the way through, just remember that every trader is always improving, is always still learning within their mindset, within their psychology. And you may feel like you're constantly trying to improve more and you feel like it never ends. And to be honest, it won't, because I've been trading for 4 years and every day I'm still learning new things. I'm still messing stuff up quite badly. And even the pros will have these days as well. So it's a constant train of needing to almost fix and stay on top of your mindset and psychology. But the more you start to understand it, the more you kind of just work on yourself and work on your psychology more than your actual strategies, then the easier this is going to become, and the more chances you have of becoming a successful and full-time trader. So if you have watched this full series, thank you. I hope even at least one episode has helped you or made you feel less alone in the trading journey. And like always, as mentioned before, I've made the Trader's Mind Telegram group. So anyone watching the Trader's Mind series on YouTube, if you just click the link, it will take you straight to the group. And this is just where I do mindset and psychology videos before every trading session and at the end of every trading day. And if you guys need any help throughout each session and throughout each day about your psychology and trading, then my DMs are always open as well with that Telegram group. So thank you very much for watching. If you found this helpful, please feel free to like and subscribe. Like always, I've put the link down to FTMO and XNES, who are the brokers that I use, and also to the Telegram chat, the Trader's Mind. The link's down below as well. Thank you for watching, and I'll see you in the next video.